Welcome back to our podcast, which focuses on business startups and project management within this context. Today, we are continuing our podcast with Dunstan Magro from WDM International, and this is the second part of this podcast. So, from a cost management perspective, when we're looking at now the cost side of things, which startup costs are most frequently underestimated by businesses?
I also remember mentioning compliance, so compliance costs. The impact of tax in your business is usually foreseen. The costs of involving the right professionals, because at times people say, I want to keep my costs at a very low level. But then again, money is not everything, but I started off by saying and making reference to you keep your costs at a low level, but you invest where you see a return. And investing in the right professional is extremely important. So yes, these are three basic costs that people in business unfortunately tend to not look enough into when starting off.
So, bottom line is that cash flow is key.
Always. Cash flow is king.
And how do founders find the right mechanisms of managing cash flow effectively?
Cash flow, as its name implies, it's a flow of funds. Okay, so forecasting. It is important that you forecast what to expect. It is also important that besides you forecast what to expect, you keep close tabs as to what is actually happening to your forecast. Because you might see that there are cracks in the funds which are due to you. Therefore, your credit policy is crucial to see who is creditworthy, who is financially stable. If you give credit to another business or to a potential client who are not creditworthy or who are not sound financially, then you are basically taking their problems upon you. So these are a couple of elements which one has to take into account when ensuring that the proper cash flow management is being done by the business.
You mentioned financial forecasting as being an essential element, and I fully agree. But the question then is, what role does the forecasting play in tracking the project viability vis-a-vis also the sustainability of the business?
Consider that forecasting or adequate cash flow management is like a GPS on your business. You know exactly where you are. Without this in place, you are basically out there in the wilderness. Okay, you can only build a very sustainable business if you manage your cash flow property. You know what your ins are, you know where your outs are, you know when you would need temporary finance because you might be in a seasonal business. When you need to the finance to engage into a capital project. You know exactly when to expect an excessive influx of funds, and therefore you might decide to do something different with those funds. So yes, having a GPS always pointing you in the right direction is very, very, very important.
In today's business world, KPIs, key performance indicators, are becoming sort of a buzzword, and everybody is talking about them, primarily in an employment perspective. But if we had to transfer the concept of KPIs into the financial aspects of a business, which indicators are early warning signs for a business that maybe failure is approaching?
There are various early signs, and these early warning signs are important to understand because imagine that cash is like a tap of water. When the water is freely running, nobody takes care of it. When someone closes the tap and needs water and goes to try to find the water, you enter into panic basically. So early signs would be, for example, the burnout rate. In what sense? That how much cash are you able to pump into in circumstances when your business is not as profitable as it should be. That would mean a depletion of cash reserves, which the business might have. A slowdown in the debtor days. For example, debtors start to take longer to pay you. The ability to enter or maintain a smooth cash flow in times where business is generating, in theory, the right amount of cash, but then you are investing that cash or spending that cash in activities which will not in the future render future positive cash earnings. So all these are early warning signs that you should be able to understand when they occur, because if you are able to understand at the very inception of them happening, you are able to address the problem immediately. If such a problem is not addressed the way it should be immediately, you are building unsustainable business, and therefore what happens to any unsustainable business? Because of lack of cash reserves, it means that the business will close down.
Going back to the planning of the business and the time frames during which the business model is reassessed, focusing on a new growth or a new business line. When, in your opinion, is it crucial for a sole trader to reassess their business model and evaluate the possibility of transitioning into a company?
If I recall, I did mention that one will transit from one business model or one business structure into another business structure when the time is right. And these decisions cannot be rushed. There's so-called the famous tipping point, okay? So let's say the business grows substantially, and therefore the costs of maintaining a company are totally outweighed by the business performance. That is one of the tipping points to move into a more elaborate structure for one to carry out the business. Another, so to say, tipping point would be that because the business is growing smoothly and because you have to increase the level of staff available, then it might mean that you need a stronger vehicle to carry out your business. It might also mean that another tipping point would be that when you have, let's call it pressure, but pressure in the right sense of the word, from your business partners to elevate your business, because now they want to see your business being properly governed through a company. Again, as I said before, a company comes along with a lot of more paperwork and a lot of more compliance, okay? Then that would be another tipping point, because you would have the obligation, if we can say so, from your stakeholders, and these would like to see you develop into something which is more structured. There could be other tipping points, but I will revert to my very first word. You do not shift business model until the time is right.
When one looks at the funding of a business, there are various ways that the owners, that the founders can fund their business. The typical scenario would be where there is a cash injection by the business owners themselves. But what other types of cash injection or capital injection can owners consider?
Well, funding the business is a crucial and an interesting part of the journey. So, when it comes to funding, the very first thing to ask is, okay, what type of funding do I need? What type of person or institution do I need? So, is it a family member who freely might give me the cash to develop my business because there are close ties? Is it a professional investor such as a business angel? And he comes along also potentially not only with the cash, but because they would have a substantial network which could help me in my business. Should I go to a bank who is more formalized in the approach being proposed, and therefore I go down that route. The choice of the funder is crucial in this aspect, because choosing wrongly or choosing the wrong mechanism or the wrong types of funds which are made available might negatively impact on the progress of your business. So you could end up into a situation where, of course, as a funder, I would like to see a return on my investment. But if you don't move in the direction I expect, then we will be put under pressure to deliver. And we all know that when one is put under pressure, delivery is not always sustainable. So looking at the whole aspect, looking at the wider picture, in this case, becomes very, very crucial.
So how do the founders decide what time is right for them to seek external funding?
It depends at what level their business has arrived at. So I would not go to a bank, a traditional bank, at the very initial stages, because I do not have credibility if I am just starting my business. But it might mean that at that point in time, I would rather try to raise seed capital or possibly find a business angel who is more open to a risky type of business rather than a bank. Or technically, I would need to have more funds once I have arrived at a stage where my business has a reputation, where my business has grown substantially, and therefore I would need the financial muscle of a bank. So the business journey will most often dictate what type of funds one would need, and who to approach.
We've mentioned the funds that are injected by the business owners themselves. We've mentioned business angels, family members that would be willing to invest. We've mentioned the banks. What role does the government also play in the financing of a project or the financing of a business, and potentially even at a wider context, the EU?
So any government has as its interest to safeguard the business continuity, to safeguard this business. Why? Because businesses pump in the revenue to the government. Okay? So as part of policy, various governments do incentivize businesses. So you have institutions like Malta Enterprise who basically provide different schemes towards business to invest. They help startups through one particular fund, which is the startup scheme. You have incentives such as the subsidizing of the rents. If you need to rent premises and you don't own the premises. You have schemes like Microinvest, which do inject capital in by saving you tax payable at the end of the year. So yes, the government has a vested interest to protect and to help businesses. Even at EU level, there are funds which do help businesses grow, especially when they are entering into areas which are crucial to the EU, and therefore they would allocate funds specifically to different types of business operations which would enhance the areas which the EU would like to grow in. So if one is on the lookout for these types of incentives, then that would be a very important step in ensuring that they will not be only carrying the burden themselves, but they would have access to funds which do not come from investors or banks. So please, my advice would be on the constant lookout for these.
We mentioned investors and banks, and one particular aspect that investors and banks look at is due diligence. So, what's your take on how to prepare for such a due diligence exercise?
So basically, due diligence can take different forms. And when I say different forms, you have, for example, legal due diligence, meaning that you have all documents in place. You have tax due diligence, meaning that you have all your tax affairs in place. You have reputational due diligence, meaning that you conduct your business in the most ethical way possible. So due diligence is an integral part of how one should develop, the business practices, because it is like a safety net, if we want to call it this way, for people who want to associate themselves with your business. And the safety net means that, listen, yes, this is the type of business I want to associate myself with. So due diligence is extremely important, not only from a compliance point of view.
In a globalized world like the one that we're living in, many challenges are literally at the doorstep of businesses, and we've seen this primarily when the COVID pandemic hit, and some businesses unfortunately were hit so hard that some of them were even startups at the time, and they were hit so hard. Others thrived because it gave them an opportunity. These opportunities created also a new way of doing things, like remote working. How does this impact a business in its decision as to whether to have a physical office, be completely remote, have a hybrid system? What's your experience on this point?
My experience is quite varied in the sense that every business decides its model of operation. At times, it makes sense to work remotely. Why? Because it gives you time to stay quiet, concentrate on what you need to be doing. At times, it is counterproductive. Why? For the simple reason that what you achieve at the workplace interacting with people is also crucial for the maintenance, for the camaraderie, for the effective even production of certain outcomes which are healthy for the business itself. So basically, when it comes to working on site, when it comes to working remotely, very much it always depends on the nature of the business itself. The choice is ultimately up to the owners of the business, but one has to take into account various factors. So this particularly is not an easy answer. If you want my humble opinion, yes, I would always advocate for working always within the business environment that is not remote working. Remote working should be kept at a minimum. And I'm saying this because to me, the cost of human interaction at the place of work has a very important value, not only for the success of the business itself, because being on site, you know exactly where you're heading, you know exactly what is being expected of you, and you know the targets you need to achieve because you are receiving constant feedback. Having said this, working off-site will become important under certain circumstances where you need the quiet, possibly of your home, to deliver your expertise, to deliver your way of doing things in an environment which is very familiar to you, and therefore you can express yourself in a very constructive way. I will end this possibly with a smile on the faces of our audience, because at the end of the day, it is not the very first time that when one is working remotely and therefore not in presence, you would be discussing certain things, but because you are not in presence, you might be looking at a million other, so to say, things rather than focusing attention on what is being expected of you. And this I recall the COVID days when, technically speaking, you would see people being online, but they only have their t-shirt or their shirts. And there was one who used to tell them, okay, to see whether they were appropriately dressed. Now everyone stands up and I want to have a look. You can imagine the reaction of the crowd. This brings me to the conclusion that, listen, you can have a facade, which is the laptop. You can have a facade, which is your home. But ultimately, that facade might be distorting the reality which you must be in when you are delivering a service, when you are delivering a production to the business.
Running a business does not come without its challenges, and we've mentioned COVID, we've mentioned other challenges that businesses go through. Compliance is a challenge, not only a cost, but even keeping up with compliance requirements, especially if you are a regulated business. It is quite taxing on the business owners and those who are running the business. But these are the ones that are immediately apparent. Are there any hidden costs that business owners should be on the lookout for in making sure that their business runs smoothly?
Definitely, there are. Some of them might not be as obvious. Some of them are. So, the obvious one would be, for example, data protection. Okay? You have to ensure that you have the systems in place to ensure that the privacy of the individual is very well safeguarded. But then something which is not very obvious is cybersecurity. So it is useless having a very good system of cybersecurity at your office, for example, but you do not have adequate cybersecurity measures in the house of the person working remotely. So if that person is hacked and that person is completely out of your system, then that is a massive hidden cost which one would not possibly even anticipate. So yes, there are costs which are hidden, and it is the duty to understand every working environment. And the cost would be, for example, health and safety. You might have at your premises all the health and safety measures, but if a person is working from home, for example, does this person have enough health and safety measures to ensure that even this person is safe working from home? And ultimately we have to keep in mind a very crucial element when there are these hidden costs, because not identifying this hidden cost, ultimately it is the employer, it is the business owner who becomes liable to settle any issues which arise from these hidden costs. So my word of caution is always look at the bigger picture, always challenge the status quo. What am I doing? I am doing enough, or should I do more? Always think outside of the box to be proactive and avoid these hidden costs.
Towards the beginning of this session, we mentioned that businesses start with a dream and they move on into the delivery stage when the business is actually given its own life. In this transition from dream to reality, dream to delivery, what are the common mistakes that Maltese co-founders or business people can inadvertently and maybe without knowing go through?
Yes. First of all, one would underestimate the cost of acquiring a client. So I start off my business and I say, wow, this product, for example, is very saleable. But in order to sell the product, you must invest heavily in marketing. You must invest heavily in advertising. So the cost of acquiring one client might be humongous. Underestimating timeframes. So in the very beginning, we mentioned the business plan. And in the business plan, one would anticipate that you would need 6 months to be able to launch the product. What if in reality you need 2 years to launch the product? So underestimating the time frames is a very common mistake. Associating yourself with the wrong type of business partners or with the wrong type of professional. Yes, this is another mistake which is done. At times, one associates themselves with the wrong, so to say, business partner or with the wrong professional, because one would argue that this person comes at a lesser cost, this person is more open to support me than others. But in reality, what is cheap at times would result in being much more expensive. And whoever seems to be very open towards supporting you might result in being that person who makes you headbang against the wall. So it is there where you need to do the due diligence on the stakeholders in this case. And all these are common pitfalls which people should know better and avoid.
This discussion has been primarily about ensuring a business is successful and steering away from the common mistakes that unfortunately jeopardize a business sustainably. If you had to put an immediate list of items that differentiate startups from the successful startups from the ones that fail, which are the first elements that immediately come to mind?
The very first one would be discipline. In Maltese, we have a saying, "Ajar uf miljaħ," meaning even if a chore is tedious, but it's necessary, then let it be tedious because this will avoid me pain moving forward. Being disciplined in whatever you do is important, is crucial, especially in business where the environment changes at times at a very rapid pace. Associating yourself with the right people, that is another important thing to keep in mind. Having healthy financial management and cash flow management. This is also very important because, as I said before, cash is king. Without cash, cash not in terms of lose money, but having money in the bank is essential for your business. So yes, all these, okay, and the others, of course, are quite essential for any business to have.
We mentioned quite a few times the importance of engaging the right professionals to guide the business owner, to guide the managers of the business in the right direction. How does one engage professional advice early to improve the project outcomes and reduce long-term costs?
So, professional advice. A professional advice is not advice given by someone who is amateurish in nature. Okay, so they come with a baggage, and this baggage is important because through their experience, through their knowledge, they can guide you, they can steer the ship in a different direction from where you are going to. So, yes, the professional is very important. The professional might not only be a lawyer and accountant, but they can be architects if you are going to develop property for resale. So the professional as a professional person in terms of knowledge, in terms of approach, in terms of experience, is always very an important figure in whatever you do in business. So, yes, keep in mind that the choice of these people, as I said before, is always crucial to achieve your goals. Now, one might have a sympathy for one rather than another, and that's fine. But the ultimate choice has to always be in favor of the right professional at the right time and in the right circumstance.
If a first-time entrepreneur had to walk into your office, what would be the key lessons that you would share with him?
So, as a first key lesson, it would be to be knowledgeable about what you have to offer via your business. You have to plan deeply, you have to understand what you're doing, and you need to understand perfectly what the business, what your idea really entails. You have to be passionate because at the end of the day, if you're not passionate, you are not able to convey the message towards your target client, towards your employees, and therefore you would not be able to achieve your goals. Most importantly of all, always surround yourself with the right people, whether these are professional advisors, whether these are employees, whether these are business partners, whether these are suppliers. The wrong choice of these people will lead you nowhere.
We're approaching the end of our session together. And as a final word of advice from your side, if you had to define one guiding principle for launching a business in Malta, what would it be?
So, the very crucial word of advice here would be that treat your business as a project which has to grow. Treat your business and give your business the time it takes to develop. Be aware of what the circumstances which are constantly changing are. Therefore, do not create something which is fragile, but create something which is sustainable in the long term.
We would like to thank you for being with us throughout this podcast with Dunstan Magro, who is the Managing Director of WDM International. We thank you for bearing through this podcast, and we wish to welcome you soon at future podcasts that PMI Malta chapter will be organizing in the coming months. Thank you very much for now.